Hey, 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 good morning. Comment allez-vous? The rain in Spain falls mainly on the plains. All right, so what day is it? Tuesday, the what? What is that? The 26th? Really? Wow. 2019. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. I was reminded today how lucky we are as currency traders. I was reminded today how lucky we are to have each other as a community for support. When things are good, we have someone to cheer with. When things are bad, someone kind of gives you that big bear hug you need. I'm talking with one of the programmers working on something, and he's like, hey man, I'm sorry I disappeared for the last week or so. I had a stroke. It's like I've been in the hospital. He said, so he's typing in the chat, right? Because that's how the world works now. And he's like, yeah, I can't really speak right now. They say, hey, 4 or 5 weeks, I should be able to speak again. Like, wow, right? So our everyday sort of normal benign day of waking up and looking at the markets and thinking intellectually, what does it all mean? How do all the pieces fit together? How do I safely get into this trade and make money and all that kind of stuff? What a blessing to be like, that's our job. That's truly a blessing. And if you've ever had any other job in your life, like being a farmer or working in a restaurant, they work way harder physically than we do. And there's no glory, there's no big money, there's no yellow Lamborghini. So I guess, again, we're a blessing to be current. We have a blessing just being a currency trader where you can work out of your home office and make big money. And I step outside 10, 15, 20 times a day. I go outside just to take a look around or go, get some sun on my face. I don't really like hang outside, but anyways, just like that we have this opportunity. And then again, like I said, that we have each other for strength and support and stuff. So anyways, thank you very much for being in my life. I appreciate you. That being said, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. We're a broker, you're a trader. Let's get it on. So I've set the table, I've lit the candles. I do these webinars for you every single day, and I'm sharing my 15 years of trading experience with you because I'd like you to be success. And when you feel confident in your newly found skills, we're hoping that you'll pay it back by opening an account at TradersWay.com. Maybe you can start with the demo today, download MT4, then look at the link below this video. You can download all my chart templates, and you have a really good foundation to start with. And then one day when you're ready to trade real money, you'll choose Traders Way as the prime broker to your successful Forex trading business. So again, thank you for being part of the Traders Way family. Okay, let's go. All right, so we set up counter trend trades on Monday. They worked great. Now what? Well, now we're running into that scenario where the trend traders are going to want to start coming back. So we don't know how many trend traders there's going to be and all that jazz. But we know they're there and they're thinking about it. We know this is a role reversal. Used to be support, may become resistance in the future. We know this is a plan A for bears. We know this is a plan B for bears. And we know this is a monthly pivot point. So all of this should act as resistance, don't you think? And when you put all that together, if you were a burr, you're thinking, I don't know, something like that. What do you think? Something like that? So I made some changes to the YouTube settings, and it said instant interaction. So I'm hoping the lag is gone, but I don't think the lag is gone. I wonder what causes it. Anyways, the counter trend that we did on Monday is this M2 and this whole exit zone. So this is an out, and this is an in. And now we're approaching that area where it could be a bullish out and a bearish in. Yeah, maybe. Well, our job isn't even to have that. Our job is just to set it all up. But it seems to me like this is a reasonable trade plan for today if you're already bear. Seems reasonable to me. Okay. Let me change the color slightly so it doesn't match. That's terrible. Just a slightly different purple. Yeah, okay, that's better. It's not quite gray. All right, good. So a little bit laggy, but better. Okay, good. Here's the other one. Very similar setup. I did it for you last week and then showed it to you yesterday. Okay. This is the big out. This is an in. Right? WM2. Okay. So bulls are on their way. Where would a bear sell this? Well, this is your plan A. This is your plan B. And you notice that this one is more sideways. The CAD was a little further down, a little further up. So we don't really know if this is range bound or not. Now, if you're a bull and you hit here, you'll say you're a genius because that's your target based on the M2, and that also keeps us in the range. So you're both swing trading and range trading at the same time. Okay, so bears are watching closely, but it's not an amazing bear setup because that's really what you want, right? You don't want this as a bearish setup. Typically, you don't want to sell in the middle of a range, right? But a bear is a bear, and you might look at this on a higher time frame. You might say, well, Wayne, on a 4 hour, it's so much more convincing, or on a 1 hour, it's so much more convincing. Well, yeah, that's up to you. Okay. Just to kind of wrap up the month, it did an M3 to M1-ish. Then it did M3 to M1. That's a bit unusual, doing the pattern twice. It's interesting, right? What's up, PE? Yeah, well, looking at next month's swings are definitely part of a lot of these plans. Okay. Now, some of these setups, we had like this weekly M2 again, very obvious entries this week. What was different, the lack of concurrency had to do with some yen pairs were down at the monthly exit and some were not. But many of them were on the weekly up. Okay. Lots of great trading opportunities if you did your job and you were there when you were supposed to be. Lots of good opportunities. It just comes down to whether you like them or not. Weekly M2 again. Off of a pivot. Was it the same as the other two I took? No, because the other ones I took had to do with the exit. So there was a sort of a counter trend aspect to it, not just macro. This one's already through the weekly and monthly central PP. So the next move down for bears is right here at, well, whatever that is. Bears are going to defend this line. Okay. And bulls are going to defend this line. So to put all that together, what you might see today is sort of up, down, and then up. See what I mean? If you're a bear, you're just going to want to, let's sort of change this. How would I do this? Let's go magenta. Yeah, if you're a bear, you're simply going to be selling up here, and if you're a bull, you'll be buying here. Okay? Nobody knows which one's right, but one of these guys is going to get paid. Notice that this was the proper entry for a bull, so this is actually the add-on. And bears have been waiting all week, and they expected, you know, Tuesday, Wednesday is fine. Totally part of the plan. Absolutely, totally part of the plan. If you're a bear waiting, you know, on Sunday the market opens, and you're like, oh, open up at an M2. I guess probably Tuesday or Wednesday I'll get short. Cool. That's how it is. It's perfect. So you're getting into the groove now. It's coming up. You might have an opportunity soon. Notice the lack of trend, and that's why I skipped. Okay, I skipped this one because not only was this not a monthly exit, but lack of trend. But this is definitely tradable, especially if you're cool with the range. So I wrote a paper yesterday talking about how the fluctuation of foreign exchange prices can impact consumers' optimum when purchasing a basket of domestic and foreign products. Yes! I compared the euro to the USD and gave an example of BMWs versus GMCs. a little schooling on purchasing power parity, but specifically how it changes the slope of the budget constraint and shifting the indifference curve. So if anyone's done micro, is sort of a macro take on microeconomics, which is an academic way of saying it was a giant waste of time. But that's what school sometimes is. Busy work. I think what happens is the TAs collect them, hand out grades. I don't think the professor will even see the paper. But anyways, it's brilliant, I tell you, it's brilliant. Cool. All right, so what you want to do, go into a smaller time frame. What is it, Japanese spring break? Cash, I don't listen to such things. So I don't know, but I can tell you there's seasonality involved. Just want to say it for the 100th time. We knew Japanese yen would be strong in April, and it'll probably get strong. Well, sorry, was it March still? We knew the yen pairs would get, the Japanese yen specifically would get strong in March. We knew it, we discussed it, talked about it 10,000 times, set up trade plans for it, and it happened. Okay, great. It actually has happened twice so far in the month. Big Japanese strength moves. But I did tell you that a month ago, 2 months ago, 3 months ago, 4 months ago, 5 months ago, 6 months ago. So either I actually have a crystal ball or it's actually a pretty common occurrence this time of year. And I expect the same thing to happen in April. Okay? So is it going to happen again? April 27th to May 6th? A flash crash? It doesn't like pop up on my emotional radar, Cash. You know what I mean? No, well, you're talking about May. No, so the repatriation plays over. I don't recall. Now, my recollection certainly can be wrong. I mean, if anything can be wrong, it's somebody's memory. And then their interpretation of their memory. But I don't recall like May flash crashing on a reoccurring basis. So I don't know. If it happens, it happens. I'll probably have stops in place anyways, right? So that's why I use them. Which king is stepping down? Cash says super thin liquidity. There's liquidity in May. There's lots of liquidity in May. I don't count the summer sort of low volume and low volatility. To me, in my mind, again, my mind could be completely wrong. I didn't crunch all the data, 100 years of price and time data, and came up with a number or a calendar date. But in my mind, the calendar date when summer starts is the day after the Fed meeting in June. So June 16th, first day of summer. And that's when volume and volatility is going to wane. So funny. This morning, my wife's doing her hair. I'm shaving. I'm like, yeah, I think I'll buy the stock market in August. And she's like, yeah, that sounds good. And then I'm like, well, unless the S&P 500 drops like 10% or something, I think we should just buy some, not a lot, but 10% of our cash we'll just buy if there's a sharp decline in the stock market. I'm shaving. She's like, yeah, that makes sense. So my wife and I are setting up trade plans. Nice. Yeah, Jimbo. Well, Jimbo's right. You can't predict a flash crash. But I think what he's saying is, because now it's an overused word, right? But let's just say a big move, let's say a big drop or something. But, I hope this doesn't sound too arrogant. I don't know how to say it, but over the many, many years of me trading, it's very rare that I'm surprised about a move. It's very rare. Like I'll admit the October move we had this year with the quote unquote flash crash of the S&P 500 in October. Yeah, I didn't expect that. That's pretty unusual. October for that move is strange, right? But Thanksgiving would not be strange. January, the thing that happened in January, not surprising at all. None whatsoever. So typically I'm selling the stock market mid-December to certainly the beginning of January, right? Sometimes I start the selling process at Thanksgiving. So it could be as early as the third week of November. But see, this is how I think, right? Like I know the third week of November, I'm going to start looking to sell the S&P 500. And by January 1st, I'll be dumping the S&P 500. But I know these things, right? I know these things already. And then there's going to be a bounce the third week of January 2020. So I know what direction to look for things. And I'm usually pretty good because it's not me. It's just the market. It's what the market does. So like a flash crash, that's unpredictable, as Jimbo says. But those are pretty rare. And what happened in October was a strange occurrence that typically doesn't happen. And again, those are generally fairly rare too. There's reasons behind these markets. So if you ever feel like the market is a random walk, you're simply missing some information or you lack experience. Or you work at a big institution and you earn a salary. It's amazing. Winthrop and Penelope McDonald and Jimbo. What? No, my wife's not a trader. She hates it. But, anyways. Well, S&B, okay, that's not a flash crash either per se. Okay? A flash crash is just, it happens and it's a singularity in the price time continuum. Like the first time like a true flash crash happened, remember I had CNBC on and the market just dropped like 20% in 1 minute. And nobody, right? I think it was a computer bug or something. And it triggered everyone's cells and the market was already in such a way that it was a house of cards and it was, right? The S&B debacle was based on a policy the Swiss National Bank carried out for years. And they said, we're going to peg to the euro. And we're going to defend the peg. And they did for years. And it created a market. In of itself, it became its own market. And then the world was getting fairly worried, like, dude, what's going on here, right? Like, they're having trouble. They're spending lots of money defending this peg, but people were playing it because the Swiss National Bank kept coming out saying that's their policy. Great. So, right? Then on a Monday, a senior person at the Swiss National Bank did a press conference, and he said the peg is still the central policy of the Swiss National Bank. 2 days later, they killed the peg. And of course, destroyed probably $1 trillion worth of net worth because they were not transparent. That's not a flash crash. Somebody came out and lied. Right? That's different than, right? I mean, they removed the bottom. It's like saying it's the pilot's fault you jumped out of the airplane, but once you were out the door, you were falling fast and furious, right? And there was no stopping you. So it's kind of like that, where the whole world just got pushed out of the plane. But anyways. William says, what? When markets are overbought and oversold, just getting back to normal levels. I'm not sure. I must have missed the earlier comment. So anyways, yeah. So an early May drop in yens? Yeah, it's possible. Sure. I don't see why. And you're saying Japanese holidays? Okay, so Japanese people are not repatriating money. So I'm not sure even the mechanics of, if Japanese banks are closed for holidays, how would the Japanese yen get strong? So it may not actually make any sense, but I don't know. Let's remind us when we get there, okay? I have no problem with that. All right. Let's do gold and oil. So how do you want to make this move here? You're going to move this up and over. Seems to me it's going to be like that, right? So if you're going to be a bull, how does this smell? It's crazy, right? We nailed this bottom. We nailed the 1, 2, 3. We nailed the swing, right? Nailed the swing. Now we're setting up 1, 2, 3, 4 for the 5th time in the move. Just amazing. Let's do the time warp again. This is still holding. Let me drag this across. Oops. Okay, let me go into like a 15-minute chart. So we know we have the support here from last week. And we opened at a WM2. So what is the target for oil this week? William, you're saying a flash crash is banks manipulating? No. Yeah, M4 guys, good job. Here's your weekly swing entry. Here's your target, and you see how it overlaps. So you got your monthly exit and you got your weekly exit. So that seems pretty reasonable if you're a bull. Yeah, I know these conspiracy theories, William. Okay, I consider them conspiracy theories. That's all. And my concern, obviously, I'm not some guy behind a curtain pulling strings saying, all right, all the banks, we're talking about a market like what, Bank of America, JP Morgan, and Goldman Sachs, and Citibank, they're all sitting around colluding, saying, all right, today we're going to flash crash. It's really hard to believe. These guys don't even talk to each other. Now, the reason I hesitate to say it's absolutely not true is that, well, we have found out that same situation happened on LIBOR and some other things. Okay, but here's my point. So even if it was true that flash crashes are a collusion of all the major banks working in coordination to manipulate the markets and take money from their own clients, even if that's true, it's not helpful to us as retail traders to think that way, because it takes away from the idea that you can carefully plan your trades in advance using fundamental analysis and then set up positions based on technical analysis and have some sort of reasonably anticipated outcome. Because if it's all manipulated, then what's the point of even doing analysis? And that's my concern. So even if it was true, it's not helpful. But usually that's the conspiracy theory part comes from people that really don't know how to trade or how the markets work. So it seems like voodoo magic, or it does seem like there are people behind the scenes pulling strings, and that's what's helping you. That's what's making you lose money. It's all manipulated, right? Look, I've been doing this a long time. It doesn't feel manipulated to me. I'm just saying, I don't know. I only have 15 years of experience. And at this point in my life, it's reasonably straightforward, day after day, week after week, month after month. It's repetitive, if anything, right? So I don't know if repetitive and predictive are the same thing, but it doesn't feel out of control and random. And I've been through red hot markets. I've been through ice cold markets. I've seen flash crashes. I've seen months and months of no volatility, and then I've seen months and months of ridiculous volatility. I've made 5,000 pip calls, laid out weeks in advance. That doesn't sound random to me, right? See what I mean? So I don't know. Just don't bring it into our our temple, right? Keep all these impure thoughts out of the temple. All right, that's fine. I actually know many other ways that banks make ridiculous amounts of money. And it's not through that kind of stuff. But whatever. Cool. La 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 la. We did that. We did power. So we can do this one. Amazing, huh? Not a lot's changed. So how do you want to play this one? Mark it up. Oops. Mark it up, create a plan. So this is a little concerning that it's down. See, what I want is for it to go up. But I'd mark it this way, and then you can interpret it any way you want. Okay. Money, banks make money through swaps and all that kind of stuff. That's true. But let's just say if you have $1 billion in cash, not credit, banks can make money for you. Not a problem. They can just turn it on, make money. They need your billion in cash because they're not allowed to use their cash. They can just turn a spigot and make a fortune for you and for themselves. But they have to have your billion in cash. So if you happen, see, even billionaires don't have $1 billion in cash. Okay? So you got to be so liquid that you have $1 billion in cash. If you're that person, banks will just print money for you practically. It's not a problem for them. So to manipulate the foreign exchange market, and to do so, they'll need collusion amongst all the banks. Stranger things have happened, but I have my doubts. There's just easier ways for banks to make money without breaking the law and without coordinating with their mortal enemies, right? So anyways, but like I said, LIBOR was exactly what you were talking about, all the banks getting together to collude. But it's funny, all the banks actually means like 5 dudes. Yes, they're from different banks, but it was like basically 12 angry men locked into a room for years. And at one point they're like, why don't we just collude? We're all friends now. Why don't we just collude and make tons of money? So it wasn't actually the banks, it was these dudes. But still. Pound, okay, we did that kind of lockstep sideways. Okay. How about requests? Look at our oil, man. Awesome, huh? Oscar Mike. You're beautiful. I've covered everything, Kevin. So let's drill down on USD CAD, but now on a daily basis. So we know we have sort of a role reversal hammock type setup. Let's do this, I guess. Not really helpful. Dig, if you will, the picture. Yeah, this top concerns me. So it really comes down to where you pick up a role reversal. There's one here, and there's one sort of where we are right now. So I don't know if you're going to play it off the daily M1. See, depending on the timing, even if you're a bull, it could do this, it could do this, it could do this, then sort of that. So it could be down again today, Tuesday, down again Wednesday, up on Thursday, up on Friday. So it could do that, or if it wants to recover earlier, it could do, let's say, down, up, down, up. Okay, so that's how a bull's going to set it up. There is no other way. Right? If you're a bull, that's the only setup you have. If you're a bear, not much more to do, I suppose. I guess you can chip away here and then maybe get a breakout and then here, kind of reset, reset, reset. EuroCAD, Azabu? Okay, I'll do EuroCAD for Azabu. EuroCAD. Feel like Yehor. EuroCAD. Well, the first thing I see is it lacks trend, so that concerns me. So I don't really want to trade it. That's the first thought. Boom, don't really want this. And then we got this congestion, which we're approaching now. Yeah, sort of not interested. See how easy that is? How do I prevent analysis paralysis? Looking at fibs, support, resistance, and all that kind of stuff. Well, first of all, I'd just go right through the whole process in the book. Before I do anything, is this trending up, down, or sideways? Okay, if it's trending up, I want to be a bull, and I only buy dips to support. Ideally at Fibonacci retracements, or I sell rallies to resistance, ideally Fibonacci resistance. If it's moving sideways, I don't use Fibonacci at all. I certainly don't have to trade, but if I do trade, I use oscillators, and I'm going to buy at support, exit at resistance, or sell at resistance, exit at support, ideally in the direction of my fundamental bias. Okay? And that helps me with analysis paralysis, if at all. I think the other best thing to do is open yourself up to, like, let's say you only trade 1 hour in a 4-hour chart. So you're not scalping at all, and you're not even spot trading. So now what? you're looking for easy trades. You're looking for low-hanging fruit. You're probably only swing trading, and that's it. So, but see, the nice thing about swing trading, like how many people, well, I guess I shouldn't ask that, especially with the lag, but let's say you have a job or other commitments outside of trading, and you just can't sit at a rig like mine and sit for hours and hours and hours and hours and hours and hours and hours a day. You just can't do that. You could be a swing trader and probably work I suppose in the beginning, an hour a week, but you could probably chop that down to about 15 minutes a week. You just have to be available basically Sunday night. Right? Most of your trades are either going to be Friday afternoon or Sunday afternoon, or really it depends where your market is. So it might be super early Monday morning, but all your trades are going to be about the same time, and they're going to use the same strategy. You're already going to have bias. You just have to be there and enter the trades. Maybe you even use limit orders if that's your style. You could really chop this down to, much less than an hour a week. Okay. Yeah, I'd love to see Ethiopia. If you could go back in time like 6,000 years, and they're like, what do you want to see? Like you're in Bill and Ted's Excellent Adventure, see Ethiopia 6,000 years ago would be pretty interesting. Brooks, like, you'll have plenty of free time. Yeah, Kevin. Well, the way you do it is you enter your trades, place your stops, and log out. Okay? And so, like, open multiple accounts at Trader's Way. Okay? And have one account, all it does is swing trade. And maybe only like weekly swing trades. And then have a second account, and all you get on that account is monthly swing trades. And what you do is you enter in your stop, you enter your limit after your trade's in, right? So now you have you're risking 50 pips, you're going for 333. I like things like a 333 OCO. Okay? That's what I like. You can put in a 333 OCO and then shut down your charts. Like log out of the account now. And you can check it in a week. Check it, but only check on Saturdays. Because the interesting thing about that is if you look at your charts and you start to panic, you can't do a damn thing about it. So hopefully you can breathe a little bit before you panic, okay? But remind yourself, say it out loud, write it down on a piece of paper, post the paper to a wall, make sure you actually write it, you don't print it, because this is a mental and emotional contract with yourself. The point of the exercise, the point of having separate accounts and separate types of analyses and specific times to enter and all that kind of stuff, comes to how do you say it properly? I'm not going to say it properly, but to the fact that you are explicitly practicing to let your winners run. Okay? You have to say it out loud. So you're in a good trade, you got good setups, you got your stops placed, your limit, And now you have to cheer yourself on to hang on. Let it run, let it run. And don't worry if you get the minus 33, don't worry about it. As long as it's good entries, like as long as you know how to swing trade. If you don't know how to swing trade, I don't think you can be successful in the long run anyways. I mean, let's cut to the chase. If you don't know how to swing trade it, you ain't going to cut it. You're going to get hacked up. You're going to die of 1,000 lashes. Okay? But once you got all that down, then you can start folding in spot trading, scalping, and all that kind of stuff. But if you can't swing trade, it ain't happening, son. Okay? Kevin says, practice is the key to mastery. Well, you have to practice properly. Because think of it, there are like professional, like how about the New York Knicks? Professional basketball team in the NBA, in the largest market in the United States. And they'll lose 18 games in a row. They're all NBA players. They're not that bad. And I'm pretty sure they practice every day. And they play a lot because they're professional basketball players, right? And they're well schooled in how to play basketball. And they're all reasonably talented. And, you know, they have good facilities and, you know. So it comes down to not just that you practice, that you know how to practice. Right? Oh, I'm sorry. It's the only one I know that will lose 18 games in a row. Well, I think what it is, sorry if you're going at the Knicks, right? It's just amazing that such a valuable team can't pull together a franchise of winners. Right? I mean, it's New York City. So it's just amazing, right? Yeah, 82 games per season, but you shouldn't lose 68 games of the 82. Maybe. But anyways, guys, there's more to it than practice. I'll give you another example, and this is another sort of life experience that I've seen. You can go to the driving range and hit 10,000 balls and still suck. You can golf 3 times a week for 30 years and still suck. So it's not the fact that you've been repetitive and you have lots of experience. Well, you have lots of experience sucking. You see what I mean? Like, it's not the practice per se. It's not like you get out and golf 3 times a week. Well, you still suck. And it's been 30 years, you still suck. Right? Like, after 3 times a week for 30 years, you should be a scratch golfer. Right? That kind of stuff. But you certainly can improve at any moment in time when you develop a laser focus on improving minute details. And that's what I suggest in my book over and over and over again. Like, if you recall that you need to have a written plan on the very specific thing you were working on to improve this week, because you just reviewed after analyzing all your trades for the week and actually reliving all your trades for the week. You then go through those because now you planned them, so you lived them once. Then you did them, you lived them twice. Now you've redone them, which means on the weekend you've gone through and remade the trade over again. So now you've done the trade 3 times. With all that triple experience now, you identify the strengths and weaknesses of how you managed all these trades that you made over the week. What did you do really, really well? Acknowledge it to yourself and praise yourself. What did you do right? You got to keep that. That's a keeper. You got to say, that's a keeper. I'm really good at identifying double bottoms. I'm really good at identifying hammocks. I'm really good. And put that up there and celebrate it, because you don't want to let that go, especially in a time of darkness when you're going through a bad stretch. You need to look up and see your wall of fame. You're like, well, you know what? I sucked this week, or this was a really bad month. That flash crash really hurt, but at least I know I'm really good at identifying hammock setups. So I'm going to go back to that, okay? But after reviewing your trades and you've identified your strengths, identify your weaknesses and pick only one, maybe two, that in the upcoming week you are going to focus on, laser focus. And you should be practicing. If you don't know what you're doing, you don't have much experience, you don't have many skills, but you're sitting there every day trying to make money, you're not going to get anywhere. So again, it's like going golfing, but you slice it every time you hit it. You can hit it 1,000 times and still slice it, right? What you should be doing is, instead of trying to make money while sucking as a trader, and don't get all upset that I said you suck. Look, in the beginning, you're going to suck compared to you 10 years from now, okay? So what I'm saying is, pick one thing that you sucked at last week and make sure you fix that this week. Expressly written, put in front of you, verbal, mental, emotional contract with yourself. I am going to refine my entries. Okay? You see what I mean? And work on that one thing over and over and over and over and over again until you become an expert. And then it goes up on your wall of fame. And then you pick the next new thing that you suck at and start unsucking. 3, 4, 5 years from now, you're going to have a list of like 10, 12 things you're amazing at. And I bet you anything you'll probably be more profitable. Okay? Right? You see what I mean? Now, I wrote that in my book in great detail, and there's idiots on Amazon that say it's just like every other book ever written, and of course that's nonsense. Most people don't practice properly. They don't know how to practice. No one's ever taught them. I documented it 13 years ago. And I bet you can take that and apply it to anything. If you want to be a concert pianist, if you want to become an Olympic archer, I don't know if you can make it to the Olympics, but you can become a really good archer if you just listen to me. Okay? All right. Mr. Heifeld, you're an archer? Get out of here. USD Swiss franc? Okay. All right. You're beautiful. Yeah, you're beautiful. Seems pretty straightforward. Of course, I don't know if it's going to work, but seems pretty straightforward. There's your M3. There's your target. That's the weekly swing. Okay. And you're on a 4-hour 21. And this is a roll reversal. It won't be exactly that way. It'll be more like, let's see, like down, up, down, something like that. The only thing to throw a wrench in there, the actual plan on the first day of the month, which was right here. Okay? So on MAR 1, the plan was buy it here, exit here. So I was very, 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 very clear. I don't know what happens next. Okay? Then, so that was by the 7th. So the actual trade was dead by the 7th. Then we talked about counter trend trade. Here, and we set it up M3, right? And the target was here. And then once we got there, I said, once again, I really don't know, but we were now done by the 20th. So 1 week up, 2 weeks down. So what do we do now? Well, at the end of the day, I really don't know. I mean, I gave you 2 unbelievable trade plans, both worked. Then I said, here, I really don't know. So here's my hesitation, because on a weekly basis, this is straightforward. This is a straightforward target. This is a straightforward target, except we've already done all of that once or twice. So it's a tertiary straightforward, which means it's not straightforward. If all you saw was that little piece, right? If all you saw was that little piece, you're like, that's straightforward. But really, this is just leftovers, so to speak. So if you were a longer term trader, you'd probably be looking at this area as a buy if you were a bull. Okay? And you're already thinking this way. Okay? So this little piece that looks straightforward, because it doesn't fit in the overall plan, because we already did the overall plan, this is somewhat more noise than everything else. Now, it's trending very well off the 21. It's doing really well on the weekly pivots. But remember, there's a greater power, right? So this is April. This is the April move. And somebody might be piecing that together. Okay. Now, of course, maybe that makes this work even more, where this comes down, we hit it early, and then it pops back up, and then we take it. Okay. But that is somebody's trade plan. Okay. To buy it at that price. We just don't know when or if. You're beautiful. Well, what's the change, Storm? The fact that it's 1.3 is sort of meaningless. So what's the change? So you took one of those, huh? Cool. Let me change. So you did sort of a counter weekly swing. The entry is perfect. But it's a bit of a counter trend. But nice job if you took it. I don't know if I like it, but you're making money, so it makes it good. But to me, it feels a bit too low for it to be more than really just a day trade or something. Because it seems to me this is fairly reasonable still. But good job if you caught it and you're making money, bro. It seems to be more of a day trade, right? So let's say, I mean, obviously the entry yesterday was, so perfectly spot on that maybe you just had to take it no matter what. And you're just like, oh, I have to. Sorry, boys, but I have to. And then what? So that's perfect. This is actually not perfect. On a daily swing, on a day trade, it's not perfect. Right, so anyways. Oh, so those are profiles. Okay, Umberjack? Those are profiles. And so when I organize them this way, I'm looking for congruency. So I call these scans. These are old scanning profiles. So I'm looking at Aussie versus Kiwi, Aussie versus Swissy, Aussie versus CAD, Aussie versus US dollar. And from that, I'm trying to discern if in the moment the Aussie is strong or weak. Because I can look at that and say, oh, let's see, Aussie stronger than Kiwi, Aussie stronger than Swissy, Aussie stronger than CAD, Aussie stronger than US dollar, Aussie strong. Okay? So now I can buy Aussie across the board if I determine that to be the right thing. Now, it'll also tell me, like, make sure we're on 4 hour. You got to have congruency here in time. Okay, now I can look at these charts and also say, let me change it to an hour. I can figure out if Aussie is strong in general, then which one is it beating the most and which one is it beating the least? And from that now I can tell what other currency is also strong. So let's say Aussie and US dollar, right? Or Aussie versus Kiwi. Okay, I could say they're also relatively strong. So now I could go Kiwi CAD and make money. I can go Kiwi Swissy and make money. Okay? Because I can see that CAD's losing, so I can go Kiwi CAD long, make money, as well as Aussie CAD long. But I'll do better on the Aussie, but I can do the Kiwi as well. So it's called relative strength. Okay, they're designed for relative strength exercises. So now I could do that for CAD. Is the CAD generally strong or generally weak? Okay, and as we just determined on the other setup, CAD is generally weak. So I could then, if I wanted to, pull up like Kiwi CAD or something, if I wanted to, right? Swissy. Is the Swissy generally strong or is it generally weak? It's weak against the Aussie. It's weak against the euro, but not much. It's weak against pound and it's weak against Swissy. Dollar. So I learned two things. The Swiss franc right now is generally weak, and so is euro. So if I buy dollar Swissy, I might as well sell euro dollar. Because euro sucks right now, and it sucks just as bad as the Swiss franc sucks. Trying to be obvious, I suppose. Is that helpful, Lumberjack? I'm comparing them all to each other to come up with first congruency versus strengths and weakness. So like, for example, this one's up, this one's up, this one's up, this one's not up. Okay? So that tells me Swiss franc is weak, and euro is just as weak as Swissy. Okay? I've been doing relative strength exercises like that for the bulk of my 15 years. So just to give you an idea where it came from, my first trading platform didn't have charts at all. It was basically something like this, and there were other, see how I can add time and high and low and all this. There was like volatility. There was a volatility statistic in there. Yeah, sorry, Jimbo. And some other data. But anyways, what I did is I every morning I would plug in the volatility data for every single currency pair that I looked at, which was, I think, all dollar pairs and all yen pairs. And I would plug it into my little spreadsheet. And I would manually, because again, I didn't have a chart, and I would look at overnight, how did the dollar do versus the Swiss franc? How did the dollar do versus the pound? How did the dollar do versus the euro? How did the dollar do against the Aussie? How did the dollar do versus the CAD? All this kind of stuff. I went through all of that. And then I went through, how did the CAD do against the dollar? How did the CAD do against the Aussie? How did the CAD do against the Swiss franc? How did the CAD do against the pound? And I went through all these and created this big spreadsheet. And I literally had to type in the volatility data for every currency pair. And I had this nice little spreadsheet template that I created, so it would change colors and all that depending on certain things. And after doing all that, and it took about an hour, it would tell me which currencies were strongest. So basically, I'm creating a volatility index for every individual currency, every G10. Okay? Volatility index, which one moved the most? And because I looked at them all and I had the individual pair data, I can tell you which one it moved the most against in what direction. Then when you look at the aggregate, it would say you want to buy CAD, you want to buy pound, you want to sell Swiss franc, you want to sell Japanese yen. Because, again, based on an index I created of overnight volatility data and the direction of the volatility, I can tell you, I could calculate which pairs are the best, right? And then I can combine them. So if the pound and whatever else I said were the strongest, and Swissy and yen were the weakest, I can go pound Swissy, pound yen, and I don't know, what did I say, CAD on the other one? Then go CAD Swissy, CAD yen. Then I took it further. So I arranged it by strengths and weaknesses. Then I organized them to create specific pairs. Then back then I had to analyze spreads. So I might find, for example, I want to go long Kiwi Swiss franc, but the spread might be 18 pips, because that's what the spread was like. I think the spread on the pound yen was like 8 or 9 pips back then. You couldn't even imagine such a thing. So some spreads suddenly were like double other spreads, and I knew if I wanted to go long, let's say, I don't know, make a pound Swissy, or let's say Kiwi Swissy, I might also know that the correlation between the Kiwi Swissy and Kiwi yen might be 82, and the Kiwi yen spread might be half the price, and it's basically the same trade. So I'll change based on the spreading back then, which ones I'd be most likely to trade, because back then I was just a day trader, and 18 pips might have been half the move, right? So anyways, I went through all that analysis, and I got down to, and I'd write this contract. Every day I had this contract, and it would say I want to buy pound dollar, pound Swissy, and CAD dollar. Those are my 3 trades based on all my analyses that I want to do, and I know if I'm a buyer or a seller. Okay? And then I would go and I would boot up my charting platform. And I would go to the pound Swissy already knowing that I'm a buyer and why I'm a buyer. And now all I needed was a dip to support, and I'm buying. And by the way, I did this every single day, and I print it all out, and then at the end, I take out a pen, because I printed it out and put it in the binder, and there was a place where I had to put how many pips I made or lost. So I got in the habit every day, at the end of the day, I put in plus 42. And then the next day, I flip it over, it's a blank piece of paper again, and I start from scratch every single day. So I spent an hour of work analyzing the foreign exchange market by creating a volatility index for every G10 currency, right? Each individual G10 currency. Then analyzed the spread after doing relative strength exercise. And then once I opened up my chart, I was unstoppable. And then I print that out, put it in at the end of the day, plus 28. Boom, put it in, next day, do it again. You see what I mean? That's where I started. I even went to the store and I bought a leather binder, a beautiful leather binder. Not much different than the, $2 binder, except it was $75 or something, right? Beautiful, right? And then I had it all divided by month, and then I think even by week, so I could go week by week by week. Week 27, on this day I did these 3 trades. On this other day I did that 2 trades. On this one I did 4 trades, and I just plus or minus. But I was so deliberate, and it was very ritualized because I was so young at being a currency trader that I had to be regimented. At the time, I was reading Ernest Shackleton's books. I bought 3 different books, and one of them was his day-by-day journal. And most of it was, I saw a penguin today, I saw a polar bear today, that kind of stuff. But like Ernest Shackleton, for example, his whole shtick, if you will, was he created and stuck to regiment. So I got in an amazing habit and discipline of doing the work. Now, maybe a year later, I was reading Market Wizards, and there was one guy who he was referred to because he interviewed some other people, and he asked, who do you know is an amazing trader? And 2 or 3 people said this dude, I forget who it was. And he called up the dude, and he's like, yeah, I'm doing this book on Market Wizards and what it takes to be a success, and I'd like to feature you in my book. Can I interview you? No. Click. So he calls him back up. Hey, your 3 friends told me that I should interview for this book. He's like, look, I don't really want to do this. He's like, come on, just let me in. He's like, okay, I'll tell you what. Every day I do my homework between 5 o'clock and 6 o'clock, and then I go home. And that way, when I get to the office the next day, I already know what I'm going to do. And I always do this, so you can come by and interview me for your book while I do my homework. If that's okay, then swing on by. If that's unacceptable, then I pass. So anyway, so he goes there, and he's like, he has 1 hour to interview this guy for the book. And he's very successful. He's making millions of dollars, probably a month. And it came down to the one thing that made him successful was that he did his homework every single night, like regiment. He did it by hand. He did it himself. He didn't have the analysts do it and stuff. And it didn't matter if he had a dinner party to go to or whatnot. He had to do it. He had to do it every day. And I remember at that time, I'm like, oh my God, that's what I do. Except I do it on overnight volatility in the London session. So, I did mine every morning. But I knew what I was going to do before I even opened a chart. And I sense sometimes that you guys open your charts and look for trades versus setting up the trade you already anticipated in advance. And then there's a big difference. You're always going to find a trade, and they probably usually suck. Aha, another suck, right? Versus you know exactly what you're going to do. Now you're going to use technical analysis to confirm or deny it. And if you don't get your price or your setup, forget it, you're taking a walk. You know what I mean? If you don't get your price, if you don't get your setup, you're not going to make the trade. Forget it. You're not interested. Versus shopping while you're hungry, eating off the floor because you're hungry, because you didn't have a plan. Yeah, funny. Yeah, as long as I got it. No, Jim, it's all right. It is funny. So anyways, let's call it a day. I'll see you tomorrow. Yeah, too true. I wrote a part of a book, the Wiley Trading Guide. It was only published in Australia, though. But I talked about how, people are going to be 65, 70 years old working at Starbucks because they need the medical benefits. They need the money, right? They don't have enough to retire. It's also a great gig because you can get there in the morning because the young guys don't want to be in the morning, so they'll send the old guy there. You can open up the Starbucks, and the first thing you do is eat the leftover pastries from the day before. Hey, it's all a benefit to you because you're 72 years old and you're working at a Starbucks. Um, Maybe you're unlucky. Maybe you didn't have a plan. Trading as a currency trader, I mean, it's all about your analysis. It's all about your plan. It's all about your hypotheses and carrying it out. That's a mature adult thing to do, and then go to the charts and set it up. Now, it's a very sort of young mentality, a young person's mentality. Sit down and like, boo, 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 trade, 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 boom, boom, boom. I made $50, snap, right? It's a very young point of view because we're all trained to play video games. So Forex isn't a video game. You basically, every time you pull the trigger, you should be shocked that you didn't make money because you have the analysis to back it up. And without that type of planning, you'll probably be lazy in everything. Because if you can't plan in currency trading, like, are you planning your hardcore planner everywhere else in your life, but you have a laissez-faire attitude for your currency trading? Probably not. So, but you want to be profitable in Forex, right? Because even if you are 72 years old and you have to choose, do you be a currency trader or do you work at Starbucks? I still would rather be a currency trader. But you know what? You need the benefits. You might need the benefits. If you don't have money, you might need the health insurance, the free food. But I actually wrote about that. I put that down, literally, that you'll be at Starbucks, working at Starbucks. You'll be 68 years old, eating day-old muffins and thinking how lucky you are. Got to take control. You got to be the expert. Remember, people pay experts for their opinions, advice, and skills. And if you're not the expert, if you can't say, I've done the research, I've done the analysis, I have the discipline, I have the plan, I have the strategy. If you can't say that, then you're not an expert and nobody's going to pay you. Nobody. Okay? So be the expert. Don't just waste time sitting in front of your charts, trade, trade, trade. Once again, it's like going golfing 3 times a week for 30 years and you're still not that good of a golfer. It's not doing it a lot. It's doing it a lot well, So instead of golfing again with your buddies, I'd go over how you stand, how you grip. I'd focus on the swing. I wouldn't bring out the iron or the driver, bring out the 7-iron and work on the 7-iron for 6 months. I'm not joking. I do entire rounds with the 7-iron. I drive, right? Close the face a little, drive. It's not going to go that far, but you'll get really good at that. And then open it up a little bit more for a fairway shots. And then as you're approaching, maybe now you'll have to open it up and you're basically using it as a wedge. Shoot, you could even take it as so far as to putt with the 7. But what you want to do is every day obsess over your 7-iron. Sleep with your 7-iron in your bed, right? Wake up in the morning as you're waiting for the microwave to heat up your microwave waffle. You're practicing your 7-iron swing. And 1 year later, you're going to be an amazing golfer with a 7-iron. Cool. Move up to a 5-iron. And in 2 years, you'll be an amazing 5-iron, an amazing 7-iron, which means you have an approach shot that's going to be better than almost anybody. Cool. You know what I mean? Yeah, but I'm not joking, Jim. I am not joking. So in only, let's say, at the end of 3 years, let's say in only 1,000 days, You'll be amazing with a 5-iron because you spent an entire year mastering your 5-iron. You'll be awesome at your 7-iron. Or let's say you're 8-iron. Let's do 8-iron. You're amazing with an 8-iron. You can hit it high, you can hit it low, you can fade it right and shape it and everything. I mean, you just know how to use an 8-iron. So you play an 8-iron like it's 3 different irons, and then spend one entire year putting. So you're not very good at driving. You understand that? The people love hitting the long ball. But you're not very good at that because you haven't really seriously practiced that. But you're amazing with a 5, you're amazing with an 8, and you're a really good putter. You could whoop any of your friends' butt golfing any day of the week because they'll be, usually pretty good with the driver, and usually pretty good with the 5, usually pretty good with an approach. They'll hit the side of the green, it'll bounce off, or hit the green and roll over, and then they'll be chipping back on, and then it'll go a little too far, and then they'll almost 2-putt, tap in, 3-putt, and you'll be really boring. You'll hit a mediocre drive, and then boom, you'll land it on the green, 1 putt, done. You're like, par. Actually, that wouldn't be a par, that'd be a birdie. So anyways, like, you know what I mean? Like, just, the point isn't that you play a lot of golf. The point is that you focus mentally, emotionally, expressly. Like, I would write these things out. It's very important to me to do all that. To master, not even golf. Like, what does that mean? To master your 8-iron this year. You see what I mean? This year, I'm going to master it. First thing is, how do you grip it? Now, how is it different from a 5-iron? How are 8-irons made? I'd go visit a factory. I'd go have a custom 8-iron made. And why did you make it this way? And why didn't you make it that way? What if you change the weight of the head? And what about this? What about that? And your swing, how is that swing different? Like I'm telling you, I'd obsess. I'd become the world's greatest 8-iron player. See what I mean? That's how you become an expert. So I recommend that you do that in Forex, absolutely. Okay, I traded the 1-minute chart for an entire year so I can build confidence. I did, and I have it. So thank you for being on my team every day. Thank you for being a client to Trader's Way. Please subscribe, please like, please comment, and please visit tradersway.com and open an account today. Once again, thank you for being on my team. See you tomorrow.